Is Bitcoin entering its parabolic run? Ethereum bouncing off the most critical level. The next move could shock the market. We got fear and greed cooling. Funding is potentially calm. And we got alpha everywhere. 0 out of 30 bull market peak indicators are hit. Let's break it down because the charts are screaming. Welcome back, crypto crew. It's your boy Tom here, bringing you the hottest in Bitcoin and crypto action. If you're ready to dive into today's market analysis, make sure you hit that like button. Hit subscribe if you haven't already, and come on over to X and follow us on X, where we talk about all things crypto all day, every day. All right, so let's kick things off with Bitcoin in the short term. Let's look for that Bitcoin short term chart. All right, here we are. Market's sitting really at like 104,500 right now. I'm going to talk about some Fibonacci because I've been hearing some guys talk about Fibonacci, and I quite don't understand like where they're coming up with levels of like 1.65. I can't dispute it because I have changed the 0.786 Fibonacci level, which is the square root of 0.618, to 0.82 for market skid. And maybe they've done the same thing at the 0.618 level. They moved it up a little bit, which I really can't take any umbrage to. But I don't know where they came up with it, but that's for another section. But let's talk about really what's going on right now. Bitcoin has broken above our flag kind of like resistance right here at 104. All right. Now, it's respecting a key Fibonacci level, and I'm going to get into that in a second. Really, there's a very good support at this high day's close, which is what we've been talking about, or I've been talking about forever. Okay, that point is so important because that's the point that it made the 109,588 or whatever chart you have, because Bitcoin unfortunately doesn't have one exchange that trades and says, okay, that was the high, so there's a little slight difference, right? But not much of a difference. Anyway, so if we zoom out a little bit, okay, if we zoom out, we're going to go kind of longer term right here. We're talking about Wyckoff, okay? It's kind of, is this the final act? Are we finally starting to break up? Accumulation or reaccumulation has built the base for us. All right. Now comes an explosive top phase. History says it ends in fireworks up at distribution. Now we got a redistribution phase coming back down to a crash. Because that's what Wyckoff says. All right. But we really have no idea where the ultimate top is going to be, where the redistribution phase will happen. Now we can make projections up here around 200,000. Yeah. But let's just take one step at a time. So here's the point of this whole chart. If you're still trading like it's 2023, you're going to be exit liquidity. Okay, so trade like a pro or become liquidity. It's your choice. All right, let's get into the Bitcoin market that I'm talking about, the fib levels. All right. We had the low in Bitcoin at 74,000. I got it at 74,000 or 75,000. What do I got the low at? I got the low at 74,509. All right. So if I'm looking for me as an old school trader, if things have changed in the last 40 years of me doing this, okay, so be it. But really, Fibonacci levels are Fibonacci levels. Now, I did change the 0.786 to 0.82, and I ask you to do that on your fib level chart too. You'll see that it's a little bit more accurate. It takes into market skid, okay, where there's a lot of action. Those are the points that right before 100% that are very important. It's also known, as a coffin box. If the marketplace is going up and it's in a downward trend, between 0.618 and 0.82, I call a coffin box. The trend should end there if the market is going back into the downward movement. It also acts as a springboard to get up through 100. So if I take this and I just go to the left to the last time the market traded lower, I'm going to find the ultimate top, which is great. because now I have a reference point, right? So if I take the 109,588 that I have less 74,508, I get 35,000. If I take 61.8% of 35,000, okay, and I add it to the bottom, I come up with a retracement level of 96,138. So that would be that would be the first point really that the marketplace had to like kind of jump over the 96,000 level. All right. So that's the first 0.618. Now, once it closed above 618, we got, for me, I have the 0.82 level. So that brings me to 103. That brings me to 103. Let me get to a better chart. This chart's kind of like off scale. So the next level I get to is 103. That's 0.82. And we're just above it right now, which is great because Fib Law, or like if you're trading Fibonacci, okay, if you're getting a close above, now it all depends on what time frame you're using. So this is a 1 hour chart, so you look for a close above on a 1 hour confirmation in the next hour. If you're using a daily, it's the same thing. You'll be using a close above that point of 103,208. Now, I've been using the high days close. That's for me is more important than the 0.82 because this is driving us up to first our take profit level at 107. Then we expect a retrace, and then we expect the market to go back towards the all-time highs, which, okay, yes, a lot of analysts are saying, of course, the all-time high is going to be a big resistance level. It could be, or it could not be. It may be, it may not be. That's probably a better way of stating it. If we break through the 109,588, okay, and we close above it, I have a 1.382 extension level at 122,170. 122,170. That's way up here. Okay, and that's great. That's basically what we've been looking for. That's basically going to get the party really started. So I'll put it up at 102. What I got? 102 at 102,800. That's close enough. Right there is a 1.382 extension based off of, if I take this low and I use this high and I take the difference and I multiply by all my fib levels, you'll come up with the proper, for me, the proper retracement points. So I don't know where they're getting up with, coming up with like 1.65. I can't, like I said, I can't really say anything, negative about it because I personally have changed 0.786 to 0.82. So I can understand it, but tell me why you've done it. I've done it because I did extensive research and found that 0.786 wasn't really the best level. And I wanted to move up towards a true Fibonacci number, which is 89. So 82 seemed to work the best for me. Now, complete disclosure, I am primarily a Forex trader. So I haven't really tested it so much in the Bitcoin market, but for me, markets are all the same. They're all the same. All right, so let's switch over to Ethereum. All right, so Ethereum. This is really cool. We mapped this out for you guys. We said, 1,500 was the launch pad, 2,200 break was the level that we needed to get over. We should see a little bit of consolidation. We're sitting right around 2,500 right now. We're seeing some consolidation in here, which is great. I wouldn't even mind a fallback to 2,200. I don't think that's going to happen. It looks like Ethereum has really started to pick up some steam. So we're getting like a chance, to accumulate the coin in this area, okay? And with the final push above 4,000, which is a really important technical level, you can see it's like right in this area here. So we can get through that chop. We get through that chop, break of, let's say, a close above 4,800 is really sending us off to that 10,000. Okay, so if we look at the weekly chart on Ethereum, all right, we'll go over here, right here. We have this on our X, all right. Ethereum, bounced beautifully off of this level right here. This was like the make or break zone, and it bounced perfectly off it. We're starting to close above it, try to get up into the top levels. We got to target really first 10,000 and then 14,000 if you're just using the bands that we have. And I explained this in another video. This was actually a projection, price projection out forward for resistance. Here was a price projection outward for support. We didn't get anywhere near $411, but let's go over to fear and greed. Fear and greed right now, it's cooling off at 70. It's not overheated. So the market is rallying, and where's the greed? It's not there. That is fantastic. That means that people are starting to wake up and start to go, I got a chance to be greedy at like 122,000. I got a chance to be greedy. So right now, it's wonderful. Now, if we look at the Bitcoin funding rates, which we've been talking about, they're basically, free. So what is it, what is it saying to us? It's saying that, the marketplace is still not really involved, and we got a lot of room to run before these funding rates start going higher and signaling that there could be some profit taken. So the kicker is also, if we look at CoinGlass, bull market indicator, like I said in the beginning, 0 out of 30 have been hit. And this is just screaming all alpha. All right. Before we wrap up, I got to tell you, Crypto Crew, about our crypto community. Hopefully this thing didn't start to go. Yes, it did. All right. Like I said, I don't understand why YouTube does this, but there's a link in the description below where it could take you over to, there we go. Thank you. All right. Thank you very much, Tom, for that. I really wanted to hear yesterday. All right, so you click on this link right here. It takes you over to an ability to sign up for our crypto trading community. It's totally free. We'll be dropping insane alpha and trading opportunities daily. We got breakout setups. We talk about Wyckoff. We'll be talking about Jesse Livermore cylinders, everything that you want to hear about. So if you want to follow us with a solid broker, just click this link right here. This broker is perfect for us. Low fees, fast execution, perfect for our strategies. So join the crew, level up your trading, and let's stack the stories, which are more important than the profits, together. So that's it for today. That's the breakdown. Bitcoin's, is it writing its final act upward towards 200,000? Well, we're going to see. Okay, we got everything, pointing in that direction. Don't forget to come on over to X. Follow us on X, where we talk about this all day, every day. And remember, do your own research. Okay, trade with your head, not over it. And as a short-term trader, enjoy the party, but dance near the door. Cheers.